Today I'm here with Prent Sanger. He is a senior loan officer with Certified Mortgage Planners, and we're going to talk all about VA construction loans. We've got a list of questions. We're going to talk about some misconceptions, and going to go straight into it.
Yeah.
You want to take these stupid things off?
Sure.
Can we just do like a real basic overview of what is a VA construction loan?
Really what you want to use these loans for is brand new construction, exactly what they sound like, where your construction is roughly about a year out for a completed home. What you're going to do is you're going to do it like any other normal loan is how it starts out. You're going to go to a lender, they're going to say, okay, we're going to do a construction to perm loan is what they're actually called. And what's going to happen there is you're going to get approved for the loan. You're going to go through the whole loan process, and either you get that approval or denial. Hopefully it's an approval. You get that, and once you're approved, we also have to make sure that the builder's approved. That's a big deal with these types of loans, and a lot of people don't realize that, as the builder has to get approved with the actual lender. That's a very short process, and any reputable builder, they'll get approved.
Okay.
But once that happens is you've closed the loan at this point, considered closed the loan at this point, and now the builder starts getting what's called payouts, okay? Or distributions, loan distributions. The loan distributions, typically there's about 5 or 6 of them throughout the life of the build, and they're based on certain points of where the builder's at. So for instance, they may say, okay, let's say it's a $500,000 construction to perm loan. The first distribution might be $100,000. And the lender's gonna say to the builder, all right, we want you to have the foundation done before we give you the next payout. Okay.
So they're looking for like milestones.
Absolutely, and you're gonna hit those milestones. Now with those milestones, the lender is also gonna send out an inspector each time to make sure that that builder is on time and where they're at. And those milestones can be as little as, say, next time we're gonna give you $50,000 and we wanna see framework and electrical. One thing that's nice with the VA side of this is typically in a lot of lenders, like our group that we work with, they don't charge the buyers while the loan and while the build is in process. Which is a big deal, because a lot of them will charge and say, okay, we at least want you to pay interest, maybe interest only. So let's say we're getting to the end and the house, you're done with the build. One of the things that's nice with that is once they're done with the build, you go back into the lender and you don't have to reapply for the loan. You basically say, okay, we're good, they're done. They give the builder their last payment and you get the keys to the house and you're done. That's a one-time close. What's also nice about that is it protects your interest rate. So, whatever your interest rate is in the beginning is what it's gonna be at the end. And the nice part is with some places, if it goes down, they'll bring it down. So, but overall, the construction to perm loan, it can be a great loan for people. It can be the right loan for the right person in the right situation. One of the questions a lot of people come up with is that, well, what if I own the piece of land?
Right.
Absolutely not a problem. As long as the builder that you find is willing to build you a home on that piece of land and that builder gets approved, not a problem at all. What if I don't own the piece of land? We roll it into the loan, just like a normal loan.
And so if you're rolling it in, how does that work on an appraisal standpoint? So if I'm paying for simple numbers, $100,000 for a plat of land, and then I know the builder will say $400,000 to build the house, so all in $500,000, they used the example of earlier. How does that?
So great question. So what happens is the appraisers actually go out before everything from the bank and they say, okay, well, we're gonna say, okay, yes, this is a $500,000, we're appraising this at $500,000 based on, and it's what the builder plans are, they take the land into consideration, all of it. Now, the appraiser will come back out at the end to make sure everything's done. They're going to double check it again. But, like I said, it really works just like a normal home buy, just the home's not there yet.
So they're assessing the land value, the home value for like if it's already existing. Does that come into the play of the purchase power that the buyer would have for that land, or who actually buys the land?
It gets rolled into the contract. It actually gets rolled into the contract. So the builder is actually buying the land.
Okay.
Technically overall out of the gate, if the customer does not own it, the builder's buying it and putting it into the contract. Just like, like a normal home. A normal home comes on a piece of land.
Right.
There you go. Same thing.
Easy. So one of the misconceptions with construction loans or a VA construction loan is distributions or payments throughout the
Right.
process. Now with a VA loan, it's 0% down. Conventional construction loan, there's draws due.
Correct.
Can you talk about the draws that the buyer would have to do during the VA construction loan process?
Absolutely. So, let's just talk about overall fees and what would be due during the process of the construction of perm. So if it's a VA, typical VA lenders will not charge the VA anything. You won't pay a dime during the entire amount of construction until you take over the home and you take over the loan. They'll set up your first payment. Now, with that being said, some lenders, and this is very common also, some lenders, we were talking about, or you just mentioned, when you have those distributions, sometimes those distributions, when they send a person out to look at the house, that person costs money. There's something, that's in the neighborhood, we're not talking thousands, but we're talking 500-600 technically. They may send someone out or may charge the VA for that actually, just that during those distribution times. Now on a conventional, typically with a conventional construction of perm, you start making at least interest only payments the day you get that loan. And then you typically do pay the distribution payments each time. You would pay some sort of fee during each of those times.
Okay, so another potential myth or misconception. So when you are doing a traditional purchase, you put down an escrow money deposit, and that money is applied towards closing costs on this house that you're buying that's already built. Now on the building side, if you were to put money down as an escrow deposit, what does that money go towards?
Absolutely, exact same. It's going to go towards the closing costs. Even with VA loans, there's still some closing costs involved with it. That money's just going to go straight towards the closing costs. And there's something else that kind of pops up with construction of perm or construction loans, and it's called an end loan, END. I usually try, especially with VAs, a lot of builders, they'll help the VAs a little bit more, they're a little bit more receptive to this, where they'll do what's called an end loan. The end loan is basically, they build the house maybe with some kind of escrow deposit down, no loan, no construction of perm loan, nothing. They build it on their dime, but then when they're about 2 months out, the veteran goes to a lender and gets a loan. It's called an end loan because it is the end of the construction period, but there's no special, it's really done like a normal loan. And I try and steer people in that direction a lot of times, simply because a construction to perm loan, it's great and it's great for the right person. But some of the myths about it, or some of the things that people have heard is they cost a little bit more, the rate's going to be a little bit more. Well, yes, it is, and that's absolutely true. The rate's not going to be percentages more, but it could be 0.25% here, a little bit more with the distribution fees. You don't have that in a normal loan, but it could cost a little bit more, as it should, because all the risk is on the builder.
Yep.
So that's one of the things, or all the risk is on the builder, and it's on the lender too. The lender just closed on that loan. Yeah, you're still responsible for it, but the builder goes bankrupt, backs out, has all this money, So I strongly suggest, if you are shopping for construction of perm loans, ask the lender if they can do an end loan. And if the lender will do an end loan, you want to make sure the builder will do it. That would be the best.
Okay, so now we're going to address a couple of the questions that came directly from this video up here. It was something we talked about, doing construction loans. It was really just building a house, and then a lot of the questions were revolving around VA construction loans. So getting right into it, one of the first ones that we saw the trend was wondering if I can do this in blank state. So are there any restrictions as far as states?
No, I mean, if you can find a lender that's willing to do it and a builder that's willing to do it, there's no state restrictions that I know of.
And one of the other questions that we noticed was, is there a resource list of lenders that offer VA new construction loans that you know of at least?
Okay, so my company, Certified Mortgage Planners, we offer them. The best place to start though would probably be your local bank. Check with your local bank first, use them as a resource, see if they have anything. Credit unions, they usually can do them as well. The big banks, they usually tend to stay away from them. And most brokerages have a lender that can do it. Okay. So that would be the best.
And before we wrap up, is there anything else that you want to add about VA construction loans?
I mean, in all honesty, when it comes down to the construction to perm loans, if you can get the end loan, do the end loan. I cannot stress that enough as far as just for the ease of it and for the overall savings of doing something like that. I would use a construction to perm loan almost as a last resort if needed. But other than that, I really don't have anything else.
Cool.
But thanks.
All right, Prent, well, I really appreciate your time addressing these questions, talking about it. I certainly learned some things, and I hope the people viewing have as well. Now, if you guys have any additional questions about VA construction loans or VA buyers that really just want to buy a house that's already existing and you live in Florida, Prent is licensed in the state, a huge wealth of knowledge, resources, super smart guy. And when it comes to lending, I don't know many people that do it better than you. So thanks again.
Thank you.
We're gonna put Prent's information in the description for this video. So again, if you live in Florida or know someone that lives in Florida, make sure that they reach out to Prent for all of their lending needs.
Awesome. Thank you so much.